Hello, everybody, and welcome to podcast number 68 of The Real Estate Show. I'm Cherise, and back in the studio with me is Karen Weller. She is a loan officer with Fairway Mortgage, but so much more than that. I met Karen. Karen was the #1 closer at Empire Title. And in her heyday, she had over 120 files on her desk that she was closing and managing a team and doing it with grace and love and exhaustion.
Yes.
I think all of the above.
Correct.
Raising a family.
Yes.
Who are now little mighty men.
That's right.
They're not little,
right.
but they're mighty.
Right. That's right.
And
many adults.
Yes. And one thing people need to know about Karen before we begin on numbers is, well, there's a little bit of baseball in your life, isn't there?
There is. I have 2 baseball players, and I live a lot on a baseball field. But I will take it every day because I know my time's coming up.
So good. And so isn't it neat how you've segued into the lending world and people, you just have this background in all aspects, honestly, of real estate.
Correct.
From having a real estate license to being a top closer to now being a top loan officer. So there's just all of these threads that we've connected in, and also your counsel to buyers. It's pretty irreplaceable because you can see it in all of these lights.
Correct.
And venues. And we'll get to more of that in a minute.
Yep.
But for those who missed the discussion about December of 2022 stats, I'm just going to quickly go through those numbers and go through a little bit about inventory and month supply. So as of the date of this podcast, we have December 2022 stats in, and we actually had a big jump down from November to December of 2022. It went down, the market did 6.7% in that time frame. So it was 490,910 versus 525,923. And we're talking December, November 2022. Then December of 21, the price was at 505,852. December of 22, with the price of where it was at 490, it's down 3%. So if we talk about year to year, December 21 versus 22, down 3%. The median price was down about 2%, a little bit higher than that. So it's not the end of the world, but the trajectory that we're starting 23 with is not upward pricing. It's not an upward momentum, it's downward. And the worst thing a seller can do is try to chase the market down. They have to be priced accurately from the beginning, understanding that pricing on escalations, pricing on last year's highs are not going to be smart. It will create the difference between their home actually selling this year or not, or selling for a lot less than what they could have gotten if they priced it right to begin with.
Right.
And so as far as the active inventory, we had less active in December than November. Time of year.
Yeah. Holidays.
But we were still up. So this is important for people to know too. What happened in 21 versus 22? Well, in December, inventory was up 190%.
Oh, wow. Wow.
Yeah, 190%.
Wow.
So people, that's why sellers, so when you hear that it's still a seller's market, it is because we are still considered at low inventory.
Yeah.
Even with maybe 2,000 homes on the market.
Exactly.
But the days on the market have crept up, and your probability of selling as a seller has changed.
Correct.
Because you might be 1 out of 4 that would sell instead of 4 out of 4.
Right.
And the month supply inventory has crept up. So it's 2.2 month supply on average in December. So, I mean, we were at 0.5. I felt like we were negative 0.5.
Certain price points, that's for sure.
Yeah.
I felt like we were negative.
Yeah, in 21. Like,
yes.
Literally, we were writing offers before we got to the home to have it ready for a buyer to then
send.
walk through. Yes.
Right.
I had my iPad send.
Yep.
And that is honestly no way for a buyer to feel safe in the end and to make great decisions. It's so much knee-jerk was happening And the trajectory was great for sellers.
Right.
But I'm so glad that things are kind of coming to a different pause.
Almost like we're almost to a balance, I feel.
Yeah.
Depending on price, points, things like that. Very different market. Very different market.
And the counseling of what worked this time last year does not work this year.
No, does not apply. And it felt like overnight our strategy had to change.
That's good.
It was that quick. I feel like we got through first quarter. Yes, we were seeing the interest rates climb, but I felt like after that first quarter, like mid-second to the end, it's like it just completely shifted.
We started losing the gains of last year. So year to date, we do have close to a 9%. So Bill McAfee had guessed 10. He was pretty close.
He usually is.
Yeah, I know. So it was 9% last year to date, but most of those gains were in the first quarter.
Right.
And so people have to understand it is different. Okay, so we've said all that. You may have heard this now twice.
Right.
But I think it's so important for people to know, where do we begin this year?
Correct.
Pause, reset.
Yes.
And get great counsel.
Yes. Because at the end of the day, it's your largest asset you will ever purchase.
Yes.
And so you need to be comfortable with it. And I feel with regards to the housing market, I don't feel it's doom and gloom. Yeah. I really don't. Real estate will always be a good investment. At least in my opinion. I won't say dump all your eggs in one basket type investment, but you want to diversify. And doing a home mortgage, sometimes you really need to look at the larger picture. From a financial standpoint, people will come to me all day long. I want to put 20% down, but they have these credit card debts hanging out there, or a line of credit that, why don't we put 10% down, pay these debts off, and you're going to cash flow better at the end of the day.
Wow.
It's about cash flow. It's about where do we put your money to best suit your needs, and that makes the most sense.
Well, Karen, there's not a lot of people that give loans and think in those terms.
No,
you're looking at the full, like you're the holistic,
it's the full picture.
You're a holistic lender,
right?
You're looking at the whole picture of that person's, and that means a lot,
Well, and you look at credit card rates, people are paying 18%, 20%, 29%, depending on the card.
So don't complain about your 6.5% interest rate.
Exactly.
That you can, at least for now, still write off part of the payment because of the interest.
And you can show for it. So
if
you have to go even 7%, get rid of the high interest rate stuff, reorganize how we structure it to where you're not paying as much in interest and you cash flow better on a monthly basis.
So I'm going to put you in a hot seat for a second. When does it not make sense for a buyer to buy a home?
That's a really good question. With regards to, if we've got credit issues where we need to build up the credit, I don't like putting borrowers into a home if we don't have at least a couple months reserve. I'm not that lender where you come to me, I have $100,000 in my bank account and we're going to take it all. I'm going to leave you with reserves in your account, because no matter who you are, life happens.
Amen.
Good, bad, or indifferent.
Yeah.
And good, you're going on vacation. Bad, maybe you fell sick, got COVID, you're out of work. Or indifferent, we have inflation.
Yeah.
Every scenario, you're spending money. And so I would much rather you have the reserve to spend that money for than tapping into a credit card and you're living paycheck to paycheck.
So have you counseled people maybe in 21 that weren't able to buy until a year later or so because of that kind of?
So a lot of my first-time home buyers threw their hands up in the air and said, I'm done. I can't do this anymore. It's too stressful. I don't have $50,000 for an appraisal gap. I need help with closing costs. Those same first-time home buyers have come back around as of the late last quarter to say, what are my options? I know my rate's higher, but if I'm comfortable with the payment, is there a way where I can get help to get into my first home? And there are ways with the flexibility of the marketplace.
Yes.
Seller concessions.
Yeah.
If they've saved up enough for their down payment but don't have closing costs, we can get the seller to cover for those.
I think for the seller to sell their home, that's a big one. And it is. For me, we have a very diverse audience with our, just our client base, but I have a lot of people that are from the first time level, but now maybe I've worked with them for 21 years, literally,
Yes.
and they're at their 8th home.
Right.
So for the super experienced, savvy buyer,
Right.
some of this still applies, right?
It does. It does. And I think for that buyer, a lot of them don't care what the rate is. They are in that point in life where we want to downsize, we want to upsize, whatever that scenario is.
Yeah.
They're ready to go. And they know that down the road, they can refinance when the rates get lower. They've budgeted. They know exactly where they want to be house payment wise. And so their mindsets are a little bit different when you go to counsel them. If it's financially, when we crunch the numbers, if it doesn't make sense, I'm very black and white in a very gray industry.
Yes, you
which
are.
is a very large
Yes.
struggle at times. But I will tell them, from my standpoint, if this were me, I probably would pass at the moment.
Yeah.
Wait a little bit, wait and see what happens. Because if you're in a situation where you don't have to buy or sell, and you're in your own home and you own it, you can kind of play with it a little bit to make that situation right for you.
You can afford to set yourself up for the best outcome.
Exactly.
And
exactly.
I think that's kind of where the market is right now, in my opinion. It can allow people to have the best outcome.
Yes.
So sellers, you're still, looking at really good prices. I mean, the gains you've had over these years of being in home ownership far outweigh having the losses that are happening right now because the market is going in a downward place with pricing. But overall, we're still at so many gains.
Correct.
Because of the appreciation that we've ridden. And so we haven't depreciated to the difference between a buyer's purchasing power and a buyer's purchasing power right now on average is about 32% less than it was in 21, according to Empire Title stats.
Yes. And that's huge.
And so their purchasing power, prices have, in general, not gone down 32%, people.
Right. No, not at all.
So buyers are just having to recalibrate and think, okay, but from my end of this, condition is key.
Yes.
Because your buyer is not going to their payment is 56% more. On average, than it was in 21 for the same house because of interest rates. So a buyer is not going to go in saying, I'm going to do everything to this house. I'm going to do all the repairs. They can't afford it.
No.
A lot of them. No. Even the astute high-end buyer, they're going to have even more particularity about the fact that, hey, we can afford this.
Right.
But do we want to afford it?
Exactly. And are we comfortable with it? And that's the whole key, is that being comfortable. At the end of the day. Don't strap yourself. I always tell people, if you buy this great house and you move in and you're staring at 4 walls because you can't live outside of it, it's probably not worth buying.
It's so good. Well, let's talk a little bit about some creative financing you've been doing.
Yes.
Because you helped me on one of my almost impossible listings. Like, what do I do with this?
Right?
Yeah, the home
How do I move this?
Yeah, it was a great home in a great location, but it had been basically taken apart, deconstructed.
Right. Yes,
so,
to say the least.
So what do you do when there's literally no bathroom in the master and the home needs to be reconstructed?
Right.
And Karen, talk about this type of loan and who is eligible for it.
So renovation loans, you can do a renovation loan, whether you're conventional financing, VA, or FHA.
You don't have to be a builder.
You don't have to be a builder, no. And how that program works is you put in minimum down to keep your cash flow. So if you're a first-time home buyer and you go conventional, and you can do it 3% down.
What?
You can do it. And so depending on the loan product, we give you additional funds to renovate the house. You get 6 months from the time you close to renovate the house. And some of the programs will allow you to do some structural stuff. FHA, VA, not so much. They'll let you remove like a non-bearing wall, open up a room. I say, the lipstick of the house, cosmetics, carpet, paint, redo a kitchen, things like that.
So conventional has more leeway.
Conventional definitely has a lot more leeway.
Yeah.
And we've seen pools put in. for the
Have you
backyard.
really?
Yes.
Were they there to begin with, or?
No, it was just grass, and they put in a pool.
Wow.
And you can do even landscaping, things of that sort. Small additions.
I didn't know it was even beyond the
Yes.
improvements that need to be made.
It is. You definitely, to upgrade, bring up to maybe the neighborhood value. You know, if a pool is in that neighborhood and you don't have one,
There's
you can.
hardly any pools
I know,
here.
right? I know, exactly. But
Wow.
you'd be amazed that there's more and more lately.
That's amazing.
So yes, there are definitely programs out there. You know, you find that fixer-upper, but you don't have that cash flow. There are ways around that.
So that's optimistic.
Yes, very optimistic.
And
very.
For me, that there's two sides of the coin from my perspective. We were helping sellers do full renovations on homes before they would list when the market was in this huge appreciation time.
Right.
Because they would get all of that money out and usually double their money or more.
Oh, yes.
But in this market, they most likely could take a big loss or we can't guarantee the gain.
Right.
I mean, there's work that has to be done on homes before you list.
Correct.
But to do all the extra, the money may not come back the way that it would.
Right. Especially in the last couple of years.
Yeah. So even for a particular home that I had listed, a few years back, the council was, let's put it together. Well, that didn't happen, and then it was sold deconstructed.
Right. Right.
And it could, because at the price point, it was a price point that drove a lot of interest to the property. And then we were able to go ahead and, have a buyer that had the vision, and it was not an investor.
Right. Right.
So
Yes.
owner occupant.
You can do owner occupant, second home, and investment homes as well.
So that's huge.
With that renovation product.
That's
Yes.
a really fun thing to know about. We can still have fun in this market.
Oh, yes. 100% you can.
To me, that loan gives a lot of options for buyers too.
Yes.
The other side of the coin was just what it opens up for buyers.
Right.
That maybe they thought would be previously impossible.
Right.
Because they might not have $200,000.
Or even a seller for that matter who thinks there's no way I'll ever be able to sell my house because of the shape that it's in.
Yeah, that's
There's
right.
options to offer out there that work for both sides, I feel.
I love it. Well, Karen, thank you so much. It's so fun to start 2023 and have a positive loan discussion.
Right? Exactly. It's all about positivity. I think it will be a great year.
Yep. And, every story is unique. And every one of the people listening, we thank you so much for listening. We know that some of you are just tapping in to understand the state of the market, but some of you are really thinking about what changes do I need to make, or even if it's a few years from now. But that's one thing, Karen, that I appreciate about you, is that you will talk and counsel, and it's not contingent on somebody making a decision in that conversation.
Nope. I will be here tomorrow. I will be here next year, and 5-10 years probably down the road.
That's awesome.
Yes, planning.
Thank you so much. And everybody, please reach out with your questions. If we can answer anything more specifically, it's time. And people who are thinking about selling, I think it's time to look at that option earlier this year than later.
Yes.
I think it would be good to get in it sooner than later. So please reach out. We're here to answer your questions. And more than anything, we appreciate you.
Thank you, Cherise, for having me.
Thank you.